From our global headquarters in New York, I'm Manus Cranny with Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Search and rescue continues after a regional plane and a military helicopter crashed midair near Washington, D.C.'s airport. Still spending, Meta and Microsoft hold on to lofty capex outlooks. Apple and Intel report earnings next. And the pause takes shape. Chair Powell is in no hurry to lower rates. The ECB expected to cut rates later this morning. Good morning, Manus.
Danny, good morning. Yeah, these markets are adjusting to the scale of the pause. It sounds more like a pause from the Fed than just a skip. Tech is higher. Zuckerberg expecting a really big year. Elon Musk of talking about an epic year. So tech is actually, the Mag 7 is getting a little bit of a bounce there this morning. We'll talk more about those results in just a moment. Tariffs come up 140 times on the S&P earning calls. To the bond market, what is the definition of what happened yesterday between the statement and, of course, the news conference? The statement was slightly more hawkish, and then Powell managed to sort of wheel it back. We don't need to be in a hurry to adjust rates, but then, of course, we're meaningfully above neutral. We'll talk about that through the morning, Danny. Rates at 450, bang in the middle.
And that pressure drove stocks at the time, but it is no secret as to what's driving them this morning. It is, as you say, earnings. Microsoft, we're keeping an eye on that this morning. It is falling in the pre-market session. It said that its cloud computing business will continue to grow slowly. It's down about 3.9%. It's struggling to handle demand from its data centers.
Okay, well, that's one side. The other side of the market is Meta rising after the CEO, Mark Zuckerberg, predicts, as he calls it, a really big year in AI for the company and hopes its assistant Llama will become the most widely used in the industry.
And just to wrap it up with the tech earnings, IBM, that is surging this morning, up more than 7.5%, reporting strong growth in its software business and a solid forecast for free cash flow.
Coming up today, we'll talk to Ludovic Subran of Allianz, and later in the hour, Leslie Falconio from UBS on the bond market.
But first, we start with breaking news and the tragedy over in Washington, D.C. A regional plane operating for American Airlines collided mid-air with a military helicopter last night near the Reagan Airport there. All flights have been halted amid the ongoing search and rescue efforts. Bloomberg's Anne-Marie Hordern is there at Reagan International. Anne-Marie, what do we know?
Well, we still have more than 300 rescue individuals here at Reagan Airport working with local authorities, working with the U.S. government, as now we are entering really a rescue phase. CBS is reporting that 18 bodies have been recovered, and this comes after in the mornings really waking up to a devastating and heartbreaking story from the nation's capital. As you mentioned, Danny, at around 9 p.m. last night, we have this passenger airline plane, a subsidiary of American Airlines, colliding mid-air with a Black Hawk helicopter. This is DCA. You have a lot of military aircraft in the vicinity, and at night you do see these helicopters have these trainings, but it collided mid-air as this plane was about to make a landing. What we know is that there were 60 passengers on this plane, 4 crew members, and the Black Hawk, there was 3 U.S. military personnel. Today is going to be all about all the questions we have as we wake up. There was a briefing in the middle of the night. We did hear from Sean Duffy. He was just sworn in yesterday as the new transportation authority. He said he's going to be working with authorities. There's a lot to review here. We do know that at this moment, the next steps is going to be, of course, the NTSB, the National Transportation Safety Board. They'll take the lead. But as you wake up, a lot of questions about how actually this could happen. We should note, we did hear from the President of the United States, President Trump, of course, his second week in office, twice last night. There was a statement from the White House where the president talked about that he's been fully briefed on the terrible accident that just took place. He wants to thank everyone for the incredible work that's being done. And then a little bit later in the evening, you can tell the president was frustrated. He talked about the fact that the airplane was on a perfect and routine line of approach to the airport. The helicopter was going straight at the airplane for an extended period of time. It is a clear night. There's all lights. Why didn't the helicopter go up or down? Again, everyone in Washington, D.C. waking up with a lot of questions and a lot of heartbreak.
Anne-Marie, good morning. As that search and rescue continues, the Pentagon and the Army have launched an investigation. Just give us a sense of how difficult that search and rescue operation is, given the weather conditions and the logistics.
It is incredibly difficult, and I'm sure you can see all the lights behind me now in the Potomac River. Not only did this happen very late at night, but remember last week there was frigid temperatures here in Washington, D.C. You did see some of the ice yesterday start to melt in the river because we did have warmer weather, a little bit balmy weather. But yesterday you had these freezing cold weather. So it's making this incredibly difficult, even though this river is not that deep. It's icy and it's muddy. So this is a very difficult rescue mission right now. And that is why you're going to see also the airport closed at least minimum till 11 a.m. today.
Anne-Marie, thank you very much. Our thoughts go to everybody involved in this tragedy. Anne-Marie Hordan in Washington. Other stories trending on your Bloomberg terminal this Thursday morning. To France and Germany, they've contracted in the fourth quarter of the last year, with Germany's GDP falling 0.2% and France falling 0.1%. It's attributed to a collapse in government confidence among businesses, consumers, and investors betting on ECB interest rate cuts.
Deutsche Bank shares are falling in the German trade this morning, down 2.5%. Fourth quarter pre-tax profit missed estimates with higher costs. CEO Christian Sewing may cut underperforming units to improve profitability. Bloomberg spoke to CFO James von Moltke earlier.
One is very high non-operating costs this year, and obviously we're unhappy about that level. Altogether, about 2.6 billion of non-operating costs, of which 2 billion had to do with litigation matters, and in fact there were 3 items that were the largest part of that. So that's obviously something we're not happy with.
Tesla reassured investors after revealing plans to begin robo-taxi operations and forecast a sales recovery this year. Elon Musk predicted what he called an epic period of growth for the company. The comments largely sidestepped the actual sales and profits results, which missed expectations.
Meta is gaining in the pre-market trade after CEO Mark Zuckerberg outlined some bold AI plans. Here's what he had to say in that earnings call.
This is going to be a really big year. I know it always feels like every year is a big year, but more than usual, it feels like the trajectory for most of our long-term initiatives is going to be a lot clearer by the end of this year. In AI, I expect that this is going to be the year when a highly intelligent and personalized AI assistant reaches more than 1 billion people, and I expect Meta AI to be that leading AI assistant.
Tom McKenzie's been tracking the results. Tom, listening to Zuckerberg there, I mean, it was a broad conversation. It was one of conviction, and it was one about monetization. The question is, do you think he did enough to convince the market that his CapEx is going to deliver the ROI?
That is the key question still, isn't it, Manus? Look, any sense that these executives, whether it's Meta or Microsoft, are walking away from their commitments around AI spend? You have not been getting any sense they're walking back on that. In fact, what we heard from Zuckerberg is doubling down. He expects to be spending hundreds of billions of dollars on CapEx around AI infrastructure in the years ahead, and setting himself and the team there at Meta a very ambitious goal to have these AI agents and for Meta to be leading the way. 1 billion customers by the end of this year. So that is the test for Meta by the end of this year, to get these AI agents into the hands of customers and businesses. They're also helping to build out their own AI agents, to build out engineering within Meta. The play has always been this. They have open source models. They get to see how developers iterate and build on those. They incorporate that back into the models. They feed that then into their products, social media and advertising. They raise revenues, increase margins, and use that spend to build out on hardware around the glasses, other products at the lab part of the Meta business, but also on that AI infrastructure. But that is the test. And one analyst said, look, this could end up being a picture of bloated spending for Meta versus visionary spending. It seems like 2025 will be the key test.
Well, there's a question yesterday. Who was the more important person? Was it Jay Powell or was it Satya Nadella of Microsoft? You could maybe argue with Satya Nadella, who had a lot to say about DeepSeek and speaking really positively about the changes, though we're showing the shares pre-market, Tom, that didn't seem to save them from some disappointments. What did we learn?
Yeah, well, we learned a couple of things. One, the comments on DeepSeek, and he said there are real innovations, both, by the way, Mark Zuckerberg and Satya Nadella, talking about the real innovations that come through as a result of DeepSeek. This at the same time that we know that Microsoft and OpenAI are scrutinizing exactly how DeepSeek built the model they did and whether or not they lent more heavily than maybe they should have on OpenAI's models. Nonetheless, Satya Nadella talking about what this means in terms of pricing more generally for AI. It becomes cheaper. He talked about models being commoditized. That drives down the price point. And again, that drives into the adoption idea that AI becomes adopted much more widely. The challenge for Microsoft right now on the earnings is around the data centers. They still haven't built out enough to meet the demand that they're getting. They're projecting data center growth of about the same level that they got in the previous quarter. Interestingly, they have about $300 billion worth of commitments for their clients and customers, but they need to build the data centers to meet those commitments, and that's where there is still a gap for Microsoft.
Yeah, well, you just look at the scale of commitment on CapEx. We've got Apple and Intel coming up. Now, Tom, we've already had some sort of warning signs about China, so that's going to be incredibly important, but also the adoption of iOS 18. So just set the stage for us.
Yeah, and look, Apple has had 5 downgrades from analysts just in the last month because of concerns about the AI prospects and proposition for Apple and whether it's going to be enough actually to drive customers to their newest handsets and their newest iPhones, the iPhone 16. Then, of course, there's the competition in China with those domestic players increasingly sophisticated, increasingly competitive and challenging them on price as well. And we know that sales in the Chinese market of iPhones have been slowing. So we're looking at the China part and we're looking, of course, at whether or not that AI play is going to come through for Apple. On Intel, it's going to be less about the numbers and more about who's going to be the next CEO. Changes at the top. Pat Gelsinger, no longer CEO. Who's lined up and what are the board and management changes at Intel?
Tom, we appreciate the update. That is Bloomberg's Tom McKenzie. Coming up, it's ECB day. We're going to unpack what to watch. Lizzie Burden is live over in Frankfurt. We're also going to catch up with Ludovic Subran of Allianz. Up next on your brief. It's your Bloomberg Brief on this Thursday morning. Danny Berger and Manus Cranny in New York. And we are 3 hours away from an ECB rate decision. They're widely expected to cut by another quarter point. Let's get to Bloomberg's Lizzie Burden, who's at the ECB headquarters in Frankfurt. Lizzie, what are we expecting today?
Well, hey, Danny, it's unanimously expected by economists, fully priced by markets, that we're going to get a quarter-point cut from the ECB today. The reason being that they need to resuscitate the euro area economy. We just had that miss on fourth-quarter GDP, the preliminary number coming through. We already had weak prints out of France and Germany before that, reflecting this weight of politics on confidence in those two big economies, the two biggest in the region. But look, a majority of economists aren't expecting Christine Lagarde to give hints on the future path for rates, even though many of her governing council over in Davos were telling us that they're expecting a cut in March as well. Why March? Well, by then we'll have more understanding, hopefully, about Trump's tariffs on Europe. We'll have the result of the German election. We'll have the quarterly forecasts as well. But it's April that really is the battleground. This is where the divergence opens up between economists' expectations. They see cuts at every meeting to June, and the market expectation, because traders have been paring their bets on ECB cuts, and actually they see potentially a pause in April. And if you look at the governing council, you've got doves like France's François Villeroy de Gallo saying he's comfortable going to 2% by June, but the likes of the Netherlands' Klaus Knot not so comfortable with that. And as we get towards 2%, where many see neutral lying, that's when things start hotting up. So really today, the focus on the guidance, and especially how they talk about restrictiveness. Do they drop the language of saying that policy is restrictive? That could be a really important hawkish signal today.
OK, Lizzie, we'll look forward to that and the press conference a little bit later on. Lizzie Burden there in Frankfurt talking about the resuscitation of Europe. That's not the situation, of course, here in the United States of America. We had the Federal Reserve yesterday. Ludovic Subran, chief economist for Allianz, joins us now. We are a fundamentally divergent story relative to what's going on in Europe. We'll come back to Europe in just a moment. When you reflect on the Fed yesterday, some people have sort of said it was a placeholder. For me, it was Powell avoided the dreadful drop that he caused in December. Tell me your assessment of the kind of pause that he has set us up for, or in your mind, is it perhaps less aggressive than a substantial pause?
I mean, well, look, we've been talking about it for quite some time. The the inflation risks of President Trump policy playbook are there. And so the terminal rate of the Fed will be at 4%. So I think the pause could actually be a bit longer than one would expect. And this is the hawkish comments yesterday were actually also anchoring this idea that there could be a two-skip phase, and maybe, maybe the one we saw last year was the last cut. I'm a bit more optimistic. I think there is still room for the Fed to cut 1 or 2 more times between now and June. But then we're done. And I think this is really what matters. What matters is we're done, and then we're going to have a transatlantic spread of about 200 bips. So that really creates a big question mark about capital flows, and certainly about U.S. exceptionalism versus Europe being trapped. Yeah. So the Fed meeting yesterday confirmed the fears of Trump's 5 Ts. Yeah.
There is a feeling, though, that central banks at this moment are just a sideshow. It's not just the Fed, it's global central banks that have to grapple with how much could change with Trump fiscal policy and tariffs. Canada, it's the most acute. Let's not forget they had a rate decision. Tiff Macklem, the BOC governor, saying we have a lot of uncertainties out there. It just didn't seem very useful to provide guidance. We don't know what the U.S. is going to do. And even when we do know more, we're going to have to do some work to figure out exactly how that's going to play out through the economy. Ludo, do central banks even matter at this point? Because everything they're saying could change just as soon as we hear from Trump deciding to unleash 25% tariffs, or even more or even less. Who knows?
This is an excellent question. I do think that central banks are in the back seat, but they are the one who have the ultimate safety belt, both in the US and in Europe. And in Europe, it's about keeping dry powder and not going too low if situation were to worsen a bit more. In the US, it's about providing this certainty for bond vigilantes, especially that the Fed is doing things in their right mind when it comes to facing inflation and avoiding a 1994 situation again. So somehow, after a super electoral year, this year is about policy implementation, and we see policy volatility explode. So the central banks have to take a bit of a backseat and see how things play out, but they are the ultimate cushion for everything. And so people are looking at them to continue to provide this long-term stability. I'm not talking about forward guidance here. I'm talking about them making sure they are within their mandates. In the job market for the US, and certainly financial stress for Europe, people are listening to these weak signals coming from those speeches to make sure that they know what they're doing if policy chaos actually continues and even gets worse when it comes to market reactions.
It's interesting when you talk about the potential for policy chaos. Before Christmas, we were talking about stagflation. This week, we're talking about potential Greenspan paradigm shift moment in AI and disinflation. Is stagflation risk still live?
Not for me. Not for me. I don't think stagflation is the issue. I think because for easy reasons. In the US, because the risk is really an over-tightening cycle that will end up with a deflationary recession. And in Europe, because inflation is nowhere there, at least not enough. And you see the numbers in Q3 for core European countries. We're already at zero growth at best in Italy and negative territory for the others. So I don't think stagflation is the problem. The problem is really how do you avoid recession, and how accommodative central bankers are ready to be to avoid recession when there is indeed something happening on the fiscal side that is quite erratic. I mean, the predictability of the fiscal situation of the US, of Germany, or of France is extremely low right now, because we have a new chancellor in one, because we have an inability to have a budget in another. And of course, in the US, because between what is happening on the Dodge and what's happening on the actual promises for taxes and so forth, nobody can do an actual forecast. So the error of forecast and fiscal policy, I think it doubled or tripled in the past few months. And so, of course, everybody's looking to central banks saying, okay, are you still there in case something goes wrong on those sides? And we saw that also in the UK and so forth. So that's where the responsibility shift has changed, but I'm not so worried about stagflationary recession.
Ludo, I just got to squeeze this in because we're running up against a break. Just about 30 seconds here. I just want to know what you make of Powell's strategy about fiscal policy, just as saying, it's all wait and see, saying that we don't judge it, when the central bank in their last decision, we learned that some people were already prejudging it. Just quickly here, Ludo, is that the right method, the right line for Powell to take?
No, no, I don't think we should do that. This is like when we look at forecasts for OECD or IMF or European Commission and we say it's ex ante policy. No, we have to have scenarios and be very conservative on the policy to be able to do a proactive monetary policy. So I do think policy mix needs to be in the decision function of central bankers. We cannot wait and see. No, I disagree with that method. Yeah.
All right. Well, that was succinct and very clear. Tell us what you really think, Ludo. Thank you so much for joining us. We always really appreciate it. Ludovic Subran of Allianz. Manus, a quick check on gold because we are just a whisker away from an all-time high in gold. It was helped that Powell decided to take a more dovish tone than the presser. $2,800 on the gold futures. Let's get you some front page news this morning. First up, the New York Times leading with President Trump planning to hold migrants at Guantanamo Bay. He's asking the Pentagon and Department of Homeland Security to examine creating a facility that could house up to 30,000.
Next up, the Journal reports that Meta has agreed to pay $25 million to resolve President Trump's claim of illegal censorship after January the 6th. The payment will be divided between Trump's presidential library and other banned Facebook users who sued Meta. The settlement comes as CEO Mark Zuckerberg has loosened the content restrictions, Danny.
And just quickly on the Bloomberg, SoftBank is discussing to invest as much as $25 billion in OpenAI. They already have a $15 billion commitment to a JV, that Project Stargate. The plans are in early stages. Representatives from both companies declined to comment. Coming up, we'll continue to talk about tech. This time, it's their earnings. From our global headquarters in New York City, welcome to Bloomberg Brief. Danny Berger and Manish Cranny here. Let's set your agenda.
Search and rescue continues after the regional plane and a military helicopter crash midair near Washington, D.C. airport. Still spending, Meta and Microsoft hold on to lofty capex outlooks. Apple and Intel up next. And the pause takes shape. Chair Powell is in no hurry to lower rates. The ECB is expected to cut later this morning. Danny, good morning. There's a little bit of a lifeboat in tech this morning.
Yeah, thank goodness, because stocks initially fell after the Powell presser. They got a little bit of a relief after Powell walked back some of the hawkishness in the statement. But it is a drop from Microsoft pre-market, gains from Meta and Tesla. We'll dig into some of the specifics in just a moment. When it comes to your 10-year yield, those inching to a new 2025 low of 4.5%. We are just above that. Again, that comes back to Powell, but Manus, maybe a boring presser, otherwise not getting dragged into the big questions of the day, which were tariffs, immigration, and tax.
Well, you know what? Maybe some people out there are probably quite grateful that it was, I think BMO described it as bland, but the issue is he didn't have that calamity impact on equities and bonds that he had in December. This was a much more, let's say, slightly hawkish statement, but then meaningfully restrictive, and we don't need to get to 2% to actually cut rates. So there was sort of like a bid and two offers there for you, and so you go, okay, well, I'll take that.
Can I be honest? I don't mean to sound like a nihilist here, but yesterday just felt like this big exercise in futility, right? We have these huge macro themes, policy uncertainty, AI. Literally no one's addressing it. Powell brushing aside, saying wait and see what happens with policy. And then when it comes to these tech earnings, they basically were like, oh, DeepSeek is great news for us. We're going to continue to spend. It just was almost frustrating that we didn't really get to the core of some of the big questions that we have.
Well, that was an evangelist moment for Satya Nadella, which was, yeah, you know, we can have our cake and eat it, actually, kind of thing. But, you know, we'll all embrace this for now, but we've got to watch him brief on it. But nobody stepped back from their CapEx commitments, right, and everybody really stepped forward to try and validate those. And that's the crux of what 2025 is.
Again, it comes back to the same thing with policy. We just don't know the impact, be it Trump tariffs or DeepSeek and cheaper AI. Meta, though, Manus, is gaining in the pre-market. Let's just take a look at those shares. CEO Mark Zuckerberg outlined a bold AI plan. Here's what he had to say.
This is going to be a really big year. I know it always feels like every year is a big year, but more than usual, it feels like the trajectory for most of our long-term initiatives is going to be a lot clearer by the end of this year. In AI, I expect that this is going to be the year when a highly intelligent and personalized AI assistant reaches more than 1 billion people. And I expect Meta AI to be that leading AI assistant.
Joining us now is Mandeep Singh from Bloomberg Intelligence. Mandeep, Meta going on to say that CapEx is still going to grow 70% in 2025 to a high-end estimate of $65 billion. Did Monday change nothing for these tech giants?
Well, so if you read the tea leaves, I think Microsoft hinted maybe, 2025 is going to be the year of peak CapEx, and they will start to see a gradual tapering. In the case of Meta, I mean, clearly they think there is still a lot of runway. They should be investing in infrastructure, and, the comment about Meta AI assistant rolling out to 1 billion people. So clearly they are not budging right now, but they did acknowledge, the DeepSeek development, and it was positive for open source. So to my mind, maybe Microsoft is thinking, how does this translate into cloud revenue? And they gave a $13 billion run rate number, which was very impressive. But the overall Azure growth was mostly in line with consensus. And that's why you saw that small negative reaction.
Mandeep, good morning to you. Yeah, 2025 is going to be about the democratization in multiple fronts, but it's also going to be about the adoption. The justification was the big issue for us all through the week talking about this. And earlier with Tom say it's about bloated spending or visionary spending. After the results, what do you think we've got?
Well, so I think in the case of Microsoft, it's very clear how they are monetizing that spend. So if they're spending $80 billion on CapEx, and they're telling you, $13 billion run rate in AI inferencing workloads and the GitHub Copilot revenue, the Office Copilot revenue, it's very clear how that's translating into revenue. In the case of Meta, it's all in the ad pricing. I mean, it grew very impressive 14%. The overall ad impressions came down to 6%, which I was a little surprised about, given, TikTok uncertainty should have helped engagement for Instagram Reels and their family of apps, and it should have translated into higher impressions growth. But clearly, Meta is benefiting when it comes to the ad spend and the growth that they are showing. It's just the separation of lines when it comes to the AI contribution versus the core business. It's not that clear. And they talked about 2025 being the year where they'll decide whether Reality Labs spend will continue or not. So that was a positive in terms of this being the year where they will be very critical about the Reality Labs, showing some growth.
Mandeep, speaking of spending, and just quickly here, 5 p.m. today, we're going to get Apple results. Is their strategy of not spending the tens of billions on AI going to look a whole lot smarter after this week?
I think so. I mean, look, the DeepSeek approach has shown that you can do this a lot more efficiently, and Apple has always come from behind and gotten it right. So I do think they will look a lot smarter today than they did last quarter because of the DeepSeek paper.
Okay, well, we're banking on a number of things, aren't we? A really big year from Mark Zuckerberg, as you said, and Elon. Don't forget Elon. He promised us an epic year as well. So it is giving us a boost this morning. Mandeep, thank you very much. And just with that in mind, let's just give you a quick snapshot of what's going on with these markets. The context around the capex there and the monetization is helping you on the stock side of things. The dollar is dipping an eighth of 1%. The question is, how long of a pause has the FOMC and Jay Powell actually set us up for? And then 10-year government bond yields, Danny. I mean, the market right now, March possibility, that's down to 19% from 30% going into this. I just wonder, which side does this bond market look at? A meaningfully restricted Fed that doesn't need to get to 2%. I mean, that's what 2 for the doves and 1 for the hawks, which is, of course, the narrative around inflation in the statement.
Or we could go back to Ludo. The Fed is a sideshow. All that matters is central bank policy, not central bank policy, fiscal policy, and they're all just along for the ride.
Yeah, and that's Allianz. There's a 200 basis points differential between Europe and the United States of America, and that will drive your capital flows. One to remember. Let's see what the ECB does later on today. We've got full coverage. Let's get back to Washington. All flights have been halted and rescue efforts continue after the deadly mid-air crash near Ronald Reagan Airport. Anne-Marie Hordan is there for us now. Anne-Marie, good morning to you. What is the current status of this search and rescue on the ground? Good morning.
Well, it's continuing with divers and first responders here on the scene, still in the Potomac River, just trying to rescue and bring out any bodies that they can. At this moment, according to CBS, there's about 18 bodies that have been rescued. We do know that this morning we will get an update. The mayor of D.C. said that officials will be back at DCA, Reagan International Airport, where I am right now, at 7:30 a.m. for an update. There's a ton of questions that everyone has about how this can actually happen. This passenger plane that was landing at the airport around 9 p.m. last night had this mid-air collision with a Black Hawk helicopter. We do know this helicopter, according to reports, was training. There's 3 U.S. military personnel on the helicopter. There was 60 passengers on that subsidiary flight of American Airlines and 4 crew members. That is what we know right now. We're waking up with a ton of questions. We know that a number of authorities are involved, including the FAA and also the National Transportation Safety Board, the NTSB. They will be taking the full lead of this investigation, and we hopefully will get more news earlier this morning. We should note that a lot of this also is coming as there is a transition of power happening in Washington, D.C. It's just the second week of President Trump's administration. The transportation secretary was only sworn in hours before this crash took place, and he was also here last night updating individuals. So they're still waiting for their teams to be in place, but a lot of questions how something like this, how this kind of collision can happen in the nation's capital.
Certainly. And Anne-Marie, we appreciate all the updates as we start to try to answer some of those questions. Anne-Marie Hordern there live from Reagan Airport in Washington, D.C. You're watching Bloomberg Brief. It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Chair Powell made it clear that the Fed will be on hold at least for the foreseeable future, also citing uncertainties, not addressing the administration's policies, saying that they are in wait-and-see mode. As you might have predicted, President Trump took to Truth Social immediately after, taking aim at the Fed. He wrote, "Because Jay Powell and the Fed failed to stop the problem they created with inflation, I will do it by unleashing American energy production, slashing regulation, rebalancing international trade, and reigniting American manufacturing. But I will do much more than stopping inflation. I will make our country financially and otherwise powerful again." Joining us now, Leslie Falconio, head of Taxable Fixed Income Strategy at UBS. Leslie, great to see you this morning. I got to say, I find that interesting because what we might have expected from Trump was for him to rail on the Fed, saying that they should have cut rates. He didn't do that, though. Instead, he struck the tone that suggested that the ball is firmly in his court for fighting inflation. Is the Fed just a sideshow to policy coming out of the White House this year?
Oh, I don't think so. I mean, they're definitely not a sideshow to the market, that's for sure. But I do think there's just so many unknowns. And you saw that during the press conference, how many times Powell was asked, if he's putting into his forecasts, various policy implementations. And although he admitted that they have a wide range, they simply don't know yet. So I don't think that they're, a sideshow. I think they're incredibly important in the market. I do think that they remain independent, however, and I don't think they're going to be, pushed around by what are on tweets. But I do think that yesterday's comments was really what the market was expecting, given the hawkishness that we saw in December, is that, they're going to be patient, they're going to wait and see. I mean, we have 2 cuts this year, one in June and one in September. But they need to see that inflation continue to come down. And more importantly, they need to watch the labor market.
Well, he made it really clear that they were in no hurry to adjust, but yet rates were meaningfully restrictive, which was sort of juxtaposed, really, wasn't it? So when you walk away from this, how open is the door to cuts if we are still meaningfully restrictive and we don't need to get to 2% to cut? I think it was 2 for the doves and 1 for the hawks.
Yeah, it's restrictive. There's no question. But, let's be honest. As we all know, most of the consumers have locked in a 30-year mortgage rate that's much lower than where we are today. We're still seeing strong consumer growth. We still have strong corporate balance sheets, even with borrowing costs, elevated than what they were, 4 years ago. but they are restrictive. I think he was asked about that terminal rate, which people love to ask him about. And, if they believe it's lower than what the 4% is currently pricing in, we're not too sure how much lower it's going to be, to tell you the truth. We look at the terminal rate, although lower than today, not that necessarily far from where we are, and definitely not in the high twos that the Fed projects over the long term.
Even so, we've seen long end yields start to come down in a pretty remarkable manner at 4.5%. They are the lowest of 2025. Leslie, it wasn't that long ago we were talking about the risk of 5% on 10-year yields. Do you think that risk has diminished?
I don't think I wouldn't say it's diminished, because we don't know what the policy implementations are going to be, right? We know the direction that the car is driving. We don't know how fast, and we don't know what the actual destination is. So because of that, it's still possible that we could see the 5%. I mean, it's very early in the year. We just don't think it's going to be sustained. And I think that what we saw from, December to, or in September, when they first did the 50 basis point cut, this 100 basis point move up, in nominal, a huge move up in real, over time, that's going to restrict financial conditions, no question. But right now, we're still seeing, the capital markets, credit very ample. But I just don't think that if the market moves above 5%, obviously it depends on whether it's because of growth or whether it's because of inflation. But even from that growth angle, if it moves over 5% and really gets sustained, I do think you're going to see a tremendous amount of headwinds, particularly when it comes to lower credit quality and fixed income, simply because you're not offered that much risk premium.
Well, at 5%, that's where the whole risk project chokes, doesn't it, from equities, and then you go straight to the haven of bonds. 200 basis points of a differential between our bonds and perhaps the rest of the world, Europe specifically today. Does that kind of supremacy continue the exceptionalism of capital flow into U.S. treasuries? And ultimately, Leslie, that's the cap. It keeps these treasury auctions flowing and provides a cap.
Well, I think that's definitely one of the variables. And to your point, if you look at the auctions this week, they did very well. And we know in about 2 weeks' time, they're going to announce the new quarterly refunding, with Bessent at the helm. And it's really not our expectation that they're going to change or increase the coupon supply. That's not what the market's expecting. Borrowing capacity is ample. Now, when you get to the latter part of the year, that might shift. But for right now, as we saw just from this week's auction, demand is ample, both from Europe and domestic.
As there is ample demand for corporate credit too, Leslie, have you been surprised in the volatility of risk assets this week with the whole DeepSeek debacle that you've seen relatively calm and continued tight spreads in corporate credit?
Yes, I was surprised how well and how contained high yield was. Now, granted, the composition of the high yield index is much different than the composition of the S&P, right? Because it's shifted so much over time. But to your point, I mean, we saw very little spread widening in the lower credit quality, and such as high yield. And in fact, we've seen very little spread, volatility for quite some time. That's something that we definitely have to watch. But at the end, I mean, we still have, the defaults remaining fairly contained. We have a strong market in private credit. The capital markets and the credits are still open, which really is the main driver to those financial conditions. But while spreads are tight, we think they're tight. We do think that yield and that carry is going to be the tailwind to total return. But the lack of volatility that we've seen is definitely something that we keep an eye on.
Leslie, thank you very much for the upsum there. Post-Fed, Leslie Falconio of UBS. Now, it is the latest episode of Bloomberg Chief Future Officer. I caught up with the Prudential CFO, Janella Frias, the outgoing CEO, Charlie Lowry. Let's take a listen.
It's about operational efficiency. It's about doing things smarter with less. And I always talk about it as it's a lifestyle, not a diet. So let's not go on programs and look to cut this much and cut that much. It's about continuous improvement, operating efficiently and having the right approach. And if you do that and you have that lifestyle, then you're actually generating funds so you can fund growth. Yeah. And so it's a flywheel, and it's the approach that we've been taking. And it's allowed us to grow our businesses faster.
To drive productivity and improve efficiency, Prudential has made significant investments in data analytics and artificial intelligence. Janella Frias plays a key role in integrating these tools into the company's processes.
We always need people. We're in the people business. But more and more, if we really want to provide the right customer experience, fast access to products, it's about technology. Technology has always been an enabler. Now it's a strategic differentiator.
We expect that by 2027, AI spending will be about $500 billion between big tech and corporates. And so you'll see an arms race to develop all of these excellent generative AI solutions that can be used opportunistically by life insurance companies who are usually a little bit more conservative. But there are many applications for them, including servicing, claims processing, and just generally reducing paperwork and cost. So we expect that the AI arms race will be a huge tailwind for the life insurance company over time.
Give me a sense of AI in Prudential. What are you experimenting with?
A few areas. One is around customer experience. In our individual life business, our underwriting process has gone from about 20 days to minutes. In our group business, we have partnered with a number of different fintechs to really improve customer experience, to bring on board capabilities, things like claims management, where we can process a disability claim faster and help people get to work faster.
How much productivity uplift are you getting and will you get?
We're probably getting 10% at this point, but I think over time that is where the value is, and it will then allow us to take our capacity in the form of people and redirect it to more value-add activities.
In a nutshell, it means turning the menial into meaningful. It can be both a huge saver of time, but it can also provide real insight. Now, where we're going with it, let's say you want to see the financial data every month. Gen AI will put inferences and say, I see trends over the past 3 years, and here's what I'm seeing and why. And it will provide prompts for our managers to think about different issues that they might not see, sort of connecting the dots.
So that's the newly appointed CFO, Janella, and Charlie Lowry is the outgoing CEO. He's going to be going up to executive chairman. Look, you know, it's interesting. We're spending so much time talking about AI. A lot of CEOs are going to throw numbers out at us yesterday. Yesterday was a great example. Nikolai Tengen over at Norges Bank, he talked about a 15% uplift in productivity. I'm asking them, what does productivity mean to you? And that's about making massive data decisions on an actuarial level. So I think they've got a little bit more validation, maybe relative to Nikolai. I don't know what the basis for his 15% uplift was.
Yeah, I mean, I listened to something like that. I'm like, what does 15% more efficient means? We're just kind of like racing to something, and I feel like we don't know what the end game is. But I also wonder, I know you spoke to them before the DeepSeek news, how consequential would it have been for someone like Prudential to have access to that kind of capability and not have to spend as much?
They've been able to take massive actuarial decisions back, looking at data that takes you 2-3 days to actually make a significant decision. They've now got that down to a matter of hours, and in some cases on the insurance side, minutiae, minute moments of decision. There you go. You can catch that program. It was out last night, and there's more of it to come. Coming up, you got it. Tech earnings and another little bit of a rate decision for you. Context matters on Bloomberg every day.
Let's get you set up for your trading day on this Thursday. We're going to have more earnings from Southwest Airlines, UPS, Caterpillar. All of those report before the bell. Plus, we'll get the ECB decision. That's at 8:15 a.m. Eastern, followed by a news conference by Madame Lagarde at 8:45 a.m. And then more tech earnings on deck. We're going to get Apple, Intel, both of those after the market close. Manis.
Big promises from the big tech leaders last night from Elon Musk and Mark Zuckerberg. Some stocks on the move, Danny. Microsoft slipping, extended their post-earnings decline after the firm said the cloud computing business was growing more slowly and struggling to build enough data centers. So that's capacity constrained. Meta is on the up 2.5%, gaining as Mark Zuckerberg calls for a really big year in AI. There you go, an evangelist moment. And Tesla, let's leave you with a thought on that. Higher growth outlook, and you got it, the robo-taxi, it's coming. Just haven't got a precise date on that, but that's pretty much typical of Tesla. Danny.
Yeah, those shares doing an about face after the presser from we heard from Tesla. Just going to leave you with a snapshot of bond markets. We're down another 2.5 basis points, 4.5%, the lowest of 2025. Surveillance, they'll take things from here.